Good weekend, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the weekend of Friday, August 11th, 2023. What an interesting week. Gold under pressure. In fact, all the metals under pressure. Why? Well, copper's the easiest because they're having a serious slowdown in the Chinese economy. I mean, serious, one of the biggest we've seen. Lending back to levels on a monthly basis of 2009. Housing market in complete disarray. I mean, complete. They can't float issues on stocks. They're finding people don't want to buy anything. They can't get the consumer to spend their money. It is turned into a sudden nightmare for them. Welcome to the world of Russia, I guess, China. What else? What about these interest rates? You know, I hear every day the arguments why the Fed, especially this week between the CPI and PPI, why the Fed is going to do what come September 20th. The arguments, they're going to pause. No, they can't afford the pause. You're still very sticky. You got to go up. What everybody's forgetting is the market's doing the Fed's job for it right now with the help of the U.S. Treasury. The Treasury is floating this massive amount of Treasury instruments to get in the quarter, $1 trillion funding done. And as they're going for these crazy, crazy numbers, they're driving interest rates higher to lure people in. When you're down in the futures, you're kicking the yields up. And the yield, the 210 is no longer over 100, it's in the 70s. But they're all going together. And the surprise to people has been the amount of increase you're getting out of the 10 in the 30. And in the past, I can only tell you what history is. Typically when a Fed is on an interest rate hiking cycle and when they finally reach a pause rate, the 10-year is often very close to wherever the Fed fund rate is at that point in time. We're far. We're over a point away. So I don't know. You got 5 weeks that'll determine what's going on. But at the rate that we're adding yield, the market's doing the Fed's job for it. And if you keep doing this, I would say the Fed doesn't have to do very much because the impact will be seen by this. Do you not think that as you're adding yield every day, you're causing more cost to businesses? They're going to take a more conservative approach in whatever they're doing because their costs are going up. Any way you do it, businesses borrow to expand, to run business. Everybody does it. You borrow, you get the money in, you pay back your loan, the difference, and how you operate and everything's your profit, okay? But typically you got to go out and get money to get inventory, blah, blah, blah. Some people, Apple, others don't have to really do that. So it's not every company, and I get it. But I'm talking the typical company. And this impacts everything. Doesn't mean it has to slow down because the consumer, as you can see, is spending so much on services. Even the PPI today, the purchasers, and the index, and you look at that, and you saw where was most of the rise? Service part of it. Okay, that's been the key here. When we look at the gold market, it's suddenly wobbling on a monthly basis. Okay, trying to turn itself down. It never did on a weekly get back up and over the 18-week average. We've talked about that over and over. It also failed on that blue line, which I drew from way back here months ago. And that was the zone I expected it to fail at. It is working its way lower. It's not crashing. That is not what it's doing. It's working its way lower, and it's not in a trend. You have a higher high, lower low. Where I go to school, and I have a school that I teach this, that isn't a trend. The market had a bear rally back up to challenge the 18-week average and failed. And as long as it stays under that, you have downside bias. The Bollinger Band should be theoretical support because 95% of the time you trade within the band. That's back at the 1900 level. On this chart on the weekly are at 1912.90. And you're oversold. Not worthy of a short sale, but certainly not a buy. That's how I'm looking at it. The gold-silver ratio, as long as you're over this number, what happens is you want to own gold versus silver because now you need more silver to get an ounce of gold, 90 ounces, 95. What about silver itself? Still bearish. coming into the first support, 22.57, let's call it. Today's low, 22.61. You're in the ballpark. So I'm looking for the support to show up. Still has downside momentum. It's not oversold yet, but nothing bullish. I think the bears are in the market at the 24.09 level with the stop over last week's high. In the copper market, I think this was the Goldman screw-up last week. They came out, they couldn't wait to say that China's going to do something positive. And they raised their targets on copper, and they have a huge following, and people jumped in. The other school of thought, me and others, said, China's doing a lot of talk. They don't do the walk. And from that 402 level, you went down this week to 369 in 1 week from that high. That's what's wrong. The idea Goldman had is proper. The execution was terrible. Wait till they do something. Don't listen to them. Look to see what they do, because the Chinese talk big, they do little. In the platinum market, lower highs, lower lows, coming down right here. Dollar index, bullish. You had an outside week up. Outside weeks are real important. Until this is taken out, this week's low, it could be next week, the week after, who cares? Until it's taken out, it's a continuation pattern. And it says, hey, I want to come up. You're not even overbought. Are we opening the door here for the 104.37 level? Very possible. We had a price count come out today. You know what price counts are? They're proprietary to us. We put them on charts. It could be stocks. It could be futures markets. It's a proprietary tool that once a market sets up a pattern for a trend play, where might that go? Now, we also teach it. I put together a course on it, another one. You might be able to come in here and take a look and see if it's there, or talk to our brokers. It's a video course. You have to use our charting software to use the price count. I use it all the time. And it gives you an idea of where the market's going. Now, you get variables. You get what's called a first count, a second, a third. The high probability is to get to the first count, and then they drop off to the second. The first to the third are good probabilities. First and second are the strongest of them, and the first being the best. But then we have other indicators, the pivot points, the Arun. I've created all these series here for you, and they're free. I know a lot of you are very frugal. You're scared to spend $1. When you look at the market here and the other offerings, all the indicators that we have besides that, explaining them in writing, the brochures, the cause and effect sheets, all there. How do you get this? Simple. IraEpstein.com, free offers. Move your cursor if you want to the top here. You will see there's an icon. Give it a click. It'll take you there. It's pretty simple. I'm Ira. I'll see you next week. You have a great weekend.